Okay, you should be able to hear me now. Okay, the sound should be there now. I don't know why it went away, but it did. Okay, my name is Faisal Khan, and I am doing this because I want to retain some sanity for my inbox. And a lot of friends have been asking, how can we invest in cryptocurrencies? How can we do this? How can we do that? And that is the reason I'm doing this thing. So, a couple of things. Like I said, the internet speeds in Turkey suck. And because of that, I'm going to restrict it to about maybe 20-25 minutes at best. I'll take some questions. Um, but some disclaimer that I have to give: I am not a, uh, I'm not an investment advisor. I'm not an investment advisor in any shape or form. So this is not investment advice. Five things you should know. I'm not an advisor. All that I share on Facebook, like buy Ethereum or buy Bitcoin. If I do say that, that's on me. That's not meant to be copied by you. If you do it, that's on you then. I've lost money and I've made money, so I'm trying to learn and trying to figure it out what works for me. And needless to say, what works for me may not work for you. I'm equally lost in this at times as you are. Sometimes it just doesn't make sense, and I have to go back and read or talk to people who understand it better. And I'm self-taught in this thing, so everything I've learned is from YouTube. I cannot emphasize how important that has been. So reading YouTube, podcasts, talking to others, and Twitter feeds and Reddit. So amazing stuff over there if you want to spend time. So I may make mistakes during this broadcast. If say something wrong, just write something and I'll hopefully correct it. The motive for doing this thing is very simple. So I can win some sanity in my inbox. I have this knack that I need to reply to every email that comes my way. So a lot of people, friends are asking, and if a friend asks, then you have to reply back. And my goal is, and hopefully by this, I can address all those issues in one go. And I'm not promoting anything. I'm not promoting any book, any video, any referral links. I'm not selling you anything. I'm not asking you to buy anything, nothing. I want to give a shout out to Salma Jaffrey. I don't know if you know her or not. Salma Jaffrey, she's a video content strategist and she's one of the inspirations to so many people who've jumped in video. She has a YouTube channel and her Facebook channel, and her website is salmajafri.com. That's SALMAJAFRI.com. So do check it out. Maybe you also want to get on video and do something. I also want you to know that everything I've learned over here, I've learned from YouTube. YouTube is what I call accelerated learning. So whilst reading papers and going on specific websites is great, you can go for a deeper understanding by going to very specific portals and reading white papers and so forth. But YouTube is the accelerated part for learning, and I use it every day. So some warnings I want to give out. If you're starting out, please, 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 if you haven't done day trading for at least 1 year, don't do it. Stay away from day trading. Day trading requires a very strict discipline, and many of you that I know personally just don't have that discipline. Even more dangerous than day trading is people who do day trading with margin trading. These are the two things you want to stay away from: day trading and margin trading. And there's a reason why I say this. Margin trading involves leverage or geared approach. So that means if this thing goes up by, stock goes up by, I don't know, 1%, you go by 10%. If it goes down by 10%, you go down by 100%. So, it's very dangerous. You use very little money to get a lot of leverage. And when the market moves up, you make money, great. But when the market goes against you, it goes very fast, and you can watch your capital disappear quite fast. So stay away from day trading and margin trading. If you want to learn day trading, then instill discipline. What does that mean? So if you come in the starting of the day with $100 and you trade, you should be mentally be ready that if I go down 3%, I will get out of the market, and I will not be stubborn, and I will not be, I will not deliberately try to recover my 3% that day. Maybe it's not meant to be. At least you can come back the next day and come in with 97% of your capital. Likewise, if you come in with $100 on that day and you make, $4 on it, get out. You need to have a discipline when to get out in a loss and when to get out in a profit. So day trading and margin trading, stay away from it. I know many of you think that, well, I made money, and fine, you can make money, but long term, you will most likely lose money if you do day trading. Most day traders do. People who are not professional about it, they do that. Return on investment. The only reason why you're probably watching this thing is because you want your investment size to increase. So today, if you want to invest, let's say you leave your money in the bank today, you'll get maybe 1% in maybe in advanced economies, 4% in Pakistan or somewhere else, maybe 5% at best. But this is inflationary pressures are not counting here, notwithstanding here. So stocks, you put your money in a bank for 1 year, you maybe get 4%. On 100,000 rupees or $1,000, just do what 4% is. It hardly does anything to you these days. Stocks may give you a better performance, but in countries like Pakistan right now, where the markets have gone to the dogs and people have lost a lot of money, it's not good. The USA is at an all-time high, but an economic crash is imminent. The 8-year economic cycles and so forth, the 7-year cycles. So the US is also you can't make much money. With cryptocurrencies, you can get a decent return, but you have to be careful when I say this. Some are happy with 10% over, let's say, 1 year period. So 1 year period, 10% you earn, very good. But most of the people I speak to want to either double or triple their money, which makes me ask the question, are you an early adopter? And let me show you a diagram that I want to show you. Let's see, share screen. So you can see this diagram. And in this diagram, let's see, you see early adopters. Hold on, I'm trying to. So you have early adopters, early majority, late majority, and laggards. So the early adopters and the innovators, who were the 0.25%, those are the guys who got in really early. And the early adopters were, people who got in way earlier than you. You are not early adopters. You are not even early majority. You are the late majority, or in some cases the laggards. You will not make double or triple your money unless you get in on a stock very, very early and in a very speculative manner. Most likely you're seeing the tail end, which is the late majority or the laggard part of the investment part. In very, very few cases, you might be early majority, but mostly here. So when someone says, we can double the money and all that stuff, and you have to be very careful because in most cases that time is gone by. It's like me coming up to you and saying, I wish I had bought Facebook when it was $2, or I wish I had gotten Google when it was $1.50, or those times were there, but the problem is you did not do the investment. So it's long gone and over with. But if you invest wisely in stocks, in cryptocurrencies, you can make a lot of money. You can also lose a lot of money. Don't forget. Remember, when you make profit, you are making profit because someone is buying. and that person to whom you sold the share and you've made the profit, now that person could be you. You could be buying, and the reason you made that profit is because on the expectation that you will also get to sell higher. But maybe you're the last person, and after that, the price starts going down. Someone has to lose money. Someone has to lose money. That's the way the stock cycle works. There is no other way. If anyone says it otherwise, they really haven't played the market. Some people get off very lucky that they'll make money, but someone will have to lose money. So you have to be very, very careful. Can you make 20, 30, 40, 50%? Yes, absolutely. I personally know of people who trade but with a discipline. These are exceptional examples, who trade 1%, 2% a day. That means they'll take a 2% profit a day. They started with something like maybe, I don't know, $10,000. Today they're sitting on something like $370,000. They've done that over 1 year. They've lost a lot of money. They could be sitting at $500,000 or more, but that is where they are. And you can make more money, but just you have to be patient with the whole thing. And the most important part is, if you're going to go long on a stock, have a long approach on it. You say, okay, I'm going to go on the stock, I'm going to buy it, I'm going to keep it for the next 6 months. Stop checking the stock price every 5 minutes. It's not going to do you any good. It's like putting something in the oven and opening the oven again and again. Is it ready? Is it ready? It's not going to happen. So what we will not discuss in this brief presentation is, or the talk, is how the blockchain works technically. I may personally know about it, how it works. 99% of the people attending the sessions may also know about it, but or you really may not care about it. But anyways, if you want to learn about blockchain, there are so many well done videos out there that will explain it to you. So that's out there. And I will not discuss the technicality of the coins that you can invest in. What does this coin particularly do? I'm not discussing that. But obviously the whole thing comes with people who wanted to invest in Bitcoin, and when it was 3,000, they said, oh, yeah, let's buy it. And then it went to 5,000. Oh, it's too high now. And then it suddenly went to 7,000 and 10,000 and 10,000. Everyone said it's crazy, crazy, crazy. And then, they missed the boat. This is what I mean. You have to believe in the coin itself, in the opportunity itself, and be willing to take a risk. No, you will not get the Bitcoin at $50 now. You will not get the Bitcoin at $100. In fact, if you do get the Bitcoin at $50, something is seriously wrong. That's why the prices drop down. But is Bitcoin going to go to 100,000 or 200,000 or 500,000? Maybe. But you have to, then you have to believe in it. Okay, if I get in right now and I buy a Bitcoin, then I'm going to hold it for the long run, and maybe hold it for 1 year or 2 years, etc. Another fallacy that people don't know is you don't have to buy the whole Bitcoin. The whole beautiful thing about cryptocurrencies is you never have to buy the whole coin. You can buy a fraction of the coin, you can buy a tenth of the coin. So you can come and say, listen, I have $411. You can buy Bitcoin worth $411. It's all, the biggest mistake people make is they say, okay, the coin is 15,000. What are the chances of it going to 30,000? You should be looking at, okay, I have $411. How much return on capital am I looking at? Do I want to take to 10%, 20%, 30%? And that is what you need to look at. So so there's a lot of information out there regarding Bitcoin and the blockchain, and you can learn about it. But there's a reason why everyone is doing Bitcoin. It's because it's the first time, and I'm going to talk about it maybe just for a minute. It's the first time we can move value without being tethered to anyone. So we don't have to be with we don't have to be with a bank or anything like that, and so forth. And this is, mind you, the first time since the 2008 and 2009 financial crisis that you can actually park your money in coins that you own on your maybe USB drive, and no one can take it from you. It's funny, I was leaving Karachi earlier this month, and the customs officer said, dollar hai aapke paas, do you have dollars, and so forth. And I said, no. What he didn't know that I could have put $1 million or I don't know, $2 million or $10 million worth in a USB and taken it out, and there's nothing they can do about it. So in the this is why it's huge that you can park your value anywhere, and the governments cannot touch it, because hey, the whole problem is stemming that we don't trust our governments right now, and that's a huge issue. So this is one of the things you need to understand, that obviously when you buy a coin, you can buy a Bitcoin or whatever it is, you need to park it somewhere. That parking mechanism is known as a wallet, and this is where Norbert is saying, I want to recover my wallet, I want to recover my wallet. If you've lost the recovery codes, there is no way you can recover a wallet. Period. Don't argue, don't say anything. If you've lost the recovery phrases or recovery codes to your wallet, that money is gone. It may be in your USB or it may be in your computer, but if you don't know it, you can't do anything about it. So it is absolutely imperative that when people want to buy, what happens when they start checking devices? Norbert, I'll come back to you. You're a special case for many reasons also. But the fact of the matter is, when you're going to buy something and be involved in the world of cryptocurrencies, and you take your hard-earned money and you buy currencies, and then what you really want to do is you want to park that money in a wallet that you can secure very well and so forth. So please do go read about how to secure a wallet. This is a very general session. In the second session, I actually hope to open a wallet and show you how to go and secure a wallet, how to get an external wallet, how to secure it, and more importantly, how we will lose the wallet and then recover it. I think that's very important for people to know. So let me ask you one thing. If it's and I want to start with an analogy. If it's a hot day outside, and it's 35, 36 degrees, and you have a choice of wearing a light cotton t-shirt or a thick corduroy denim jacket or something, what would you wear? Chances are you would go with the cotton t-shirt, because obviously it's light and it'll keep you cool and so forth, and you will not obviously wear something that's too heavy and hot. If you have ice cream, if you have ice cream in a cup and you have in front of you two jars, one has the chocolate sprinkles on it that you can put on the ice cream. So you sit up straight. Ye sir, sit up straight. Aapke liye. If you have ice cream and you have chocolate sprinkles and you have mayonnaise, what would you put on your ice cream? I hope to God you will put sprinkles, because if you know the difference between the two. Sadly, when I talk to my friends and when I talk to colleagues and so forth, and they say, we want to invest in Ripple, we want to invest in Bitcoin Cash, we want to invest in, IOTA, and I ask them, do you know the difference? Do you know the difference? They don't. You have to understand. People expect to understand the intricacies of cryptocurrencies by reading maybe 4 articles or watching 4 videos. It just doesn't work that way, my friend. It's like you walking into the cockpit of a 747 or a 777 and you tell the pilot, okay, I'm going to give you 5 minutes, explain everything to me. It doesn't work that way. Even if you understood, do you think you can still fly the plane or even turn it on? You couldn't. So what you're doing right now, and don't be fooled by it, and don't kid yourself. If you're buying stocks or buying crypto coins without knowing why, you're speculating. It's a pure gamble. It's a purest form of gamble that you're taking. You're speculating that you could make money, but the chances are that 97 or 98%, chances that you will lose money in 6 to 12 months. This is statistics. It doesn't matter. It will happen to you if you speculate this way. Maybe you'll get lucky. Maybe you'll get lucky, and maybe you'll get lucky and you'll exit in the market and never come back. Sure, it happens to a lot of people, but that's very rare. The greed will pull you back. The early adopters who invested the stock when it was 0.00004 zeros and 3 cents, those are the people who made money. Those are the people who not doubled or tripled or quadrupled their money. They had tremendous, luck with the thing. And you know what you were doing at that time? You were laughing at them. You were laughing at them, or you were probably fighting on Facebook, or commenting. And well, guess what? The people who invested back then, they're laughing all the way to the bank right now. I personally know someone who invested. I mean, I obviously we don't know the exact number, but I think they have maybe about $4,000 or $5,000 invested in Ripple, and that 4 or 5 thousand today is, oh my god, I don't even want to tell you how much it is. It's maybe you know 4 or 5 million, if not more. And this person was dead broke, but they believed in Ripple, and today they have the money. And are there other stocks to invest? Sure, there are, but learn the difference. Ask yourself, what do you know about the stock? What do you know about it? Many people don't know anything about it. And if you don't know about it, might as well give the money to me, my friend, because you're gambling, right? And there are many ways of doing investments. There's drip investing. Drip investing is something where you take $5 every day and you invest, $10 every day and you invest, $40 every day and you invest, and you keep doing this thing day in and day out, day in and day out. You do that. I love drip investing. In fact, I do it myself, because coming in on a very particular day to buy, it has the law of averages are stacked against you. But if you do drip investing over the period of a wide horizon, you'll make money. Gambles do pay off it sometimes. There are certain days. Yesterday, I know some people who got in at Ripple at 120, 125, and it's almost two something today, and 250 or 210, depending which exchange you go to. So gambles do pay off. Those are extraordinary days, and if you can understand that there's an extraordinary day happening, and you put your money in, hopefully make money, and then get out, that's good. It's always good allocating a profit line. Biggest mistake, my friends, and even I do it many times. So I get in, okay, I'm investing $2,000 in something. I've made three. I'm sitting at 50% more investment. Should I get out? No. Stay in, make more money. Guess what? Stock goes down. I'm back at not even 2,000. I'm back at like $1,200 or something. So allocating a profit line is very important. Know when to get out. Discipline yourself and say, you know what? That's it. Knowing when to cash out and realizing your profit and not being greedy is extremely important. The more important thing is understanding the exchanges where you'll be working. I got by the way 61 emails from people, and believe it or not, all of them were asking the same thing now. Which exchange, which stock to buy, what do you recommend, how fast can I make my money, etc. And I'll get to those. But the thing that you have to understand is that today you are working, with exchanges that are centralized. Anything you trade on the exchange itself, when your money is there or when your coins are there, and if that exchange gets hacked or goes bankrupt or ceases to exist, your money is gone, because it is not on the blockchain. There's a huge misnomer that people think that when you're trading on the exchange itself, that trade is on the blockchain. That is not correct, because these are centralized exchanges. Which are the best digital wallets? I'll tell you about that one. The most important thing is to realize of something called DEX, DEX. So these are decentralized exchanges. It makes sense that we're talking about decentralized coins, decentralized finances, decentralized everything. Yet the exchange where you have to go is centralized, and the governments can very easily snoop in and stoop down and take your information and so forth. But decentralized exchanges are very cool. There is no central exchange. Every person running the client software is the exchange, and it works on the blockchain. An example of a decentralized exchange is a company called BitShares, BITSHARES, BitShares. You can look at that. You can download the client. You can take $5 and play with it. You don't need $5,000 to play with cryptocurrency. That's the beautiful part of it. You can invest any amount you want, small amounts, and more importantly, you can play with it. Uh, the BitShares program is a little difficult to understand, but there is something called a BitShares TV on cryptocurrency. It's a channel on YouTube, which on obviously BitShares cryptocurrency. Must watch it. If you also want to understand how the markets work, there is a channel on YouTube. It's called Money Week, WEEK, Money Week, one word, Money Week. And if you go scroll back maybe 2 years or 4 years ago, they have a series of videos that explain every single thing. What an ETF is, what a derivative market is, what are leverage ETFs, what are swaps, what are reverse swaps, what is a price well, what are the resistance signals, all these things, and they're explained in such beautiful details. And you can watch one video. It takes about, each video is about 8 to 10 to 12 minutes in length. Really good. Hold on, I'm just going through my notes. In the coins that you are seeing right now, if you go to Coin Market Cap and you see, you see Bitcoin, you see Ripple, you see IOTA, you see Bitcoin, Digicoin, and so forth. You have to understand what you are buying. There are only three types of coins. So one is a coin or a cryptocurrency. The second is a utility token. And the third is a tokenized security. So what are the differences? I'll tell you in a very simple way. When you're buying a digital coin or a digital currency, then these are currencies like Bitcoin, in which the encryption technique or they are used to regulate the amount of units of currency that would be available and verify the transfer, etc. And they all operate independently of a central bank and so forth. So these are what you're buying. Bitcoin is one such example. Soon, it is very possible that every fiat currency may become a cryptocurrency. In that case, but it'll still be operating with central banks. This is what the Ubin project in Singapore is doing, by the way. Then the second is obviously utility token. So a utility token could be like IOTA, for example. It's you're buying the service or the service units. Think of it as purchasing the API keys to use to access a service. That is what a utility token is. There are a unique way of funding a project, or a shared infrastructure without that basically couldn't be funded before. And so they're also pre-mined. They don't have to be mined. So there's no proof of work or proof of stake. So they are pre-mined. They'll come up and say, okay, we've mined 30 million tokens. They're up for sale. They can be used to work in our system and so forth. The third is what is called a tokenized security. And I'm going to have a water break 1 sec. Tokenized tokenized securities are basically just that. Securities that have been tokenized just so they can bypass the SEC announcement, etc. They don't, by the way, there's something called the Howey test, HOWEY. It's used in banking a lot, investment banking and so forth. Howey test. And tokenized securities do not pass the Howey test. Is it an investment or a money or an asset? Is the investment of money and an asset a common enterprise, expectation of profits, and so forth? So tokenized securities don't pass any of that, but they are traded. They are traded out there. Understand how much you want to make. You must know this. A lot of people jump into investment in cryptocurrencies not knowing how much they want to make. You will never have a day on day where you will make money. You're going to have a day where you're going to get greedy and you're going to invest and you're going to lose money. And remember, when you make money, it means someone else is buying on this price and they expect to make money. You could be that last person and then the price drops. So when you're making money in the cryptocurrency space, you're taking money out of the fiat system and putting it into the crypto system. When you lose money, you're taking money out of the crypto system and transferring it to the fiat system. Will the video be available? Yes, no, it's getting recorded. It will be available. So if you want to go somewhere, you can go. No one knows what the heck will happen in the market. Just no one knows that. I saw some people posting on Facebook, on LinkedIn, on Twitter, take a class with us, work with us, or call us, and we'll tell you how guaranteed to make money. And there are even some paid and promotion ads. Please stay clear of these people. No one, no one can guarantee you investments and so forth. And if anyone is suggesting this thing, just drop them. Drop them from your friends list. You don't want to have to do anything with them. There is some rationality in how to make how to understand why are the prices going by doing some technical analysis. There are plenty of websites that teach you on there. The cool thing about investing in cryptocurrencies is if I want to trade IBM or anything like that, these stock markets these stocks are traded in very specific markets, and these markets are time based. They open on certain days, they close on certain days, and then they shut down. And when they shut down, you can't trade these stocks. Currencies and commodity markets also open and close at certain times, but in most cases they are 24 hours. But the problem is taking your currency trade or a contract for US dollars that you may own on the London Stock Exchange and transferring it to the Hong Kong Stock Exchange is not so easy. You can sell from the London to the Hong Kong Stock Exchange, but the London market has to be open for that. So that's just something to understand in the traditional world. In the world of cryptocurrency, the markets are open 24/7, 365. You're feeling insomnia at 4 o'clock in the morning, hey, you can get up and make yourself a cup of coffee and start trading. I've done that so many times. You're an early riser, you want to get up at 5:30 in the morning and trade, you can do that. You want to get up at 11 o'clock and trade, you can do that. There is just all that time the trades are happening. They do not close down. And here's the best part: you can trade a BTC. You can buy from Europe and sell it in Canada, and buy it in Canada and sell it in India and so forth. And these are and people do that. And why would you buy Bitcoin in Europe and sell it in India? Because there's something called arbitrage. A phone in, I don't know, the United States may be $1,000. But by the time this phone comes into Pakistan or India or Bangladesh or South Africa, there's a premium on it, and that represents an arbitrage opportunity. So you have people who physically go buy phones in the U.S. and bring them to Dubai or wherever and sell them, and they make this little profit on it. But in this case, you physically have to take a flight for 10, 12, 16 hours, buy something, bring it over here, and so forth. And then there's customs declaration and so forth. In the world of cryptocurrencies, people buy a Bitcoin in Europe and sell it in America. I'll give you an example right now. If you talk about arbitrage, and I'm seeing it right now, if you buy a Bitcoin in Europe on Bitstamp, it's 11,366 euros. Right now, you can buy this. It'll take you maybe a minute or two to buy it. You can then transfer it from Europe to America and Coinbase account, which will take you about maybe 20 minutes to transfer. And you can sell it from 11,366 to 12,241. You can make about a 900 euro profit in about 30 minutes. Done. In fact, it can be even less than 30 minutes if you pay a higher fees for the transfer. So a lot of people do arbitrage. A price of Bitcoin right now in euros, in dollars, is about 14,000. Let me just give you the exact number. It's about 13,396. In Zimbabwe, a price of a Bitcoin today is $29,488. 29,000. The problem is, yes, it sounds like a really cool opportunity to go there and do all this thing. But the problem is, once you buy the Bitcoin and you sell it in Zimbabwe, how do you get the money out from there? That is a huge problem that you will encounter. So arbitrage is huge. People do it, but remember, the reason an arbitrage exists is because it's easier to bring money into that country and sell. But once you sell, you're holding on to a currency that has perhaps little value, or there are capital controls that will prevent it from going out. So in the United States, you can buy a Bitcoin for $14,000. You can go to South Korea and Seoul and sell it for $17,000, $3,000. But then how do you get the money out? Because Korean banks will not take money from South Korean Bitcoin exchanges and so forth. So arbitrage exists plenty. I am not going to teach you how to go into arbitrage, because if I do, then you'll say, okay, I did arbitrage based on your thing and so forth, and I lost money, or my money is stuck in a geography that I cannot get it out of. But people make thousands of dollars every single day using arbitrage, thousands, and there are plenty of arbitrage opportunities going out there. So you can research it and play with it. You really need to buy a currency, transfer it amongst exchanges to know where it's going. I have just a few notes left. Um, for those of you who do want to do day trading, you have to understand that it entails five things, and those five things are extremely important. Time, you have to put in the time. Your day trading is not a 2-minute job. People who do day trade get up and serve it like an office. They trade for 4 hours or 6 hours or 8 hours. They will put their 8 hours in it. You need the money. You got to understand how to read charts, something I'm learning. I don't know all of the charts. Discipline, we already talked about that, the discipline comes in. And charts and news. You got to read up on all the news and so forth, and then you do day trading. What a question people ask me again and again: what is the fundamental, and I think Sunny has also asked, what are the fundamental reasons that are driving cryptos in value? The fundamental reasons is only because if you understand what they're doing, if you really understand what they're trying to do, and people are trying to get it on early, you're getting in on early now based on the possibility of future success that these companies will have. So that's what you're trying to do. You're trying to say, okay, this company may be the next decentralized Facebook. I want to buy in the stock right now because that's when it wants to go over there. 90, I don't even know what the number is, 95%, 98% of the people playing right now, speculators, all speculators. Very few people are actually holding on to coins for a long, long term. Why does Rimsha has asked the question: why does cryptocurrency trade at different rates in different exchanges? The reason it trades in different rates in different exchanges is arbitrage. Arbitrage exists in all markets. Liquidity, limits. If you have limits on an exchange on how much money you can push out, an arbitrage is automatically created. If you, for example, right now people will say, well, the Bitcoin is 14,000 in America and it's 18,000 or 16,000 in Pakistan. Why is it 16,000 in Pakistan? It's not actually that it's 16,000 in Pakistan. It's just that the conversion rate being used is very high. And the reason it's very high is because, again, people who run exchanges have to take the coins and move it back. The liquidity providers who are working with you, they charge a premium in making sure the exchanges run. If you were buying iPhones, and when an iPhone that sells for $1,000 in the US sells for, let's say, $1,200 here, do you haggle with the person? No, because you know the cost of that they are doing this for monetary purposes. That they're bringing an iPhone here into this market and selling it, and they will charge a premium for it. So you have to understand that part. But we fail to understand that part when we go ourselves. We don't, and buy it for $1,000 and bring it back and say, "Here, I got my iPhone for $1,000." Yes, honey, but you did not put the price of your ticket, your luggage, your time into it because you did it for personal reasons. If you were doing this for a friend, maybe, but if you have to do it again and again, you'll start charging a premium also on it. There are plenty of opportunities for arbitrage, by the way. So, do look at them. The journey, it's very important that you look at something today. I kept a coin here. Hold on a second. So if you have a coin and we are going to have a coin and we know that this coin is going to be worth $10,000 tomorrow. So let's say we're talking about Bitcoin as an example. You have to look at the journey. Say you have $1,000 invested into a coin and you ask if this were to go to 15,000 in 5 years? Let's say the answer is yes. It can, but the journey to get there, this is very important. The journey to get there would probably half this coin, maybe even quarter the coin, go down to 30% of its value before rebounding up and going to the target price. That is the key. The journey, you forget the journey. You say, oh no, it's gone down. Yes, but over the long run, it'll go up. Can you sustain a discipline in yourself not to sell when the journey goes low? Because you're supposed to be looking at the 3-year or the 5-year run. In a 2-year run, the coin could go down. That is something you have to look at, very important. People say, I want to buy Ripple, I want to buy this, I want to buy that. You have to understand that there are only two coins that allow that. Again, Ethereum and Bitcoin. All currencies today are pretty much based on these two coins, Ethereum or Bitcoin. So what if you have to buy a coin known as Dogecoin? What you do is you buy either Bitcoin, and you can buy, remember, you can buy fractional Bitcoins, or you can buy fractional Ethereum. Once you are in, then you can go and buy Dogecoin and so forth. It is very important that you understand two things that I'm about to explain to you, which might save you. In your respective geography, investing abroad, flight of capital abroad, even for a temporary period, might be against the law. So you need to look at that. Also, because these two are the only coins that allow you to enter the coin space, meaning to buy Bitcoin, to buy all the other oil coins, Ethereum, and so forth. So remember, let's assume the ICO market is going crazy and all the other coins are there. You have to buy Bitcoin first. So when you buy, price of Bitcoin is going to go up. Once you've bought it, then you're going to do a trade, Bitcoin to Litecoin, Bitcoin to XYZ coin, Bitcoin to Apple coin, and then you'll own the Apple coin, which was the end target. And when you've made money, what are you going to do? You can't cash out. You have to buy Bitcoin back. You will convert, when you sell, you'll convert it into Bitcoin, and then you will sell your Bitcoin and then cash out. So that time the Bitcoin price will go down. So you remember, because the Ethereum and Bitcoin are the gateway currencies, they do give you some indication as to what is happening in the altcoin market. Let's see what else did I have in my notes. Discipline, cryptocurrencies, 24/7. I told you about the altcoin market, how it is, etc. Okay, I'm going to answer the questions because I think we've already run way over time. Regarding wallets like Bitstamp, Bitstamp is not a wallet. Bitstamp is an exchange. Is it safe to give personal information? Yes, you have to do, but make sure Bitstamp is a licensed exchange by the FCA in the EU. In Luxembourg actually, and many other exchanges like Coinbase are licensed. So by law, they require the KYC information. So yes, it's okay to give personalized information. Bitfinex, for example, is an exchange that many people don't know of where it is, why it is, who owns it, where is it operated. So I might not be okay with Bitfinex and so forth. So stick to the major exchanges, the ones that people know are reliable. Few reliable exchanges. I personally trade in HIT BTC, HIT BTC. We have to obviously Bitstamp is there, Coinbase is there. There's a token. Yes, for people asking me, I made a list of the currencies that I invest in, and I'll just give it after this question. But there are certain coins that are only traded on very certain exchanges. IOTA, for example, is only traded on Bitfinex, so you have to go there and buy it. Perlind, he's one of the co-founders of IOTA, and he's on my Facebook. He's a good friend. I've always asked him, why have you always just, restricted yourself to this exchange? And, pretty much gives it a shrug and doesn't really answer. But stick with the major exchanges. If you feel the exchange, when in doubt, check it out. My mom always says, when in doubt, check it out. So when in doubt for an exchange, just stop. Don't do it. Check it out. Ask people. Send me an inbox and I'll let you know. Is it great for personal exchanges? You ask. If you're in the long run and the market crashes like great, you can go. Can you average out? You can average out your costs. Yes, you actually can average out your costs. You can average out your costs if you keep doing profit taking and so forth. Remember, it's important to understand the underlying currency. I asked a person today. I said, "What do you want to do? I want to buy Ripple." Okay, how much? I don't know, 100 Ripple. Okay, let's go buy some XRP. He said, no, 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 no XRP. I want to buy Ripple. You see my problem? Many people don't even know that XRP is Ripple. And I said, why are you buying XRP? He says, because the banks are going to use it. And I was like, no, actually the banks won't be using XRP. XRP is for external market makers or liquidity providers who will come in and do the system. The bank-to-bank transfers, they will not be using XRP. They'll be using the Ripple protocol itself, which has nothing to do with the XRP. So it's very important to understand why the what the coin is doing. If you don't understand that part, the waves, for example, is an important coin. Why? Because all these ICOs that are taking place in the blockchain, and the ERC20 tokens, and you learn what ERC20 is later on, in the Ethereum, and I'll tell you what it is. It's why very important to know why it is. And all these other coins that are coming out, and do you know that all the other ICOs that are coming out are being built on existing blockchain platforms? Lisk, Waves, IOTA, Neo, BitShares. There's so many platforms out there, and you can actually start building on top of these platforms. And if you have a good, solid understanding of those platforms, you will do good. So, in no particular order, the currency, the coins and shares that I like, and there are quite a few of them, about 17 of them. Dogecoin, like I said, in no particular order. Dogecoin, Bitcoin, BitShares, Steam, STEEM, not the Steam dollars, but just Steam. Stellar, which is STELLAR, Stellar Lumens, which is basically the counterparty to. So if you know anything about Ripple, Ripple was founded by a guy called, one of the guys called Jed McCleb. Jed had a fight with Ripple and he separated and he forked the Ripple out and he created Stellar. And Stellar Lumens is what you want to buy. Waves, like Waves. Waves is a nice platform to buy. Bytecoin, BYTE coin, very cheap right now. It's in the pennies. So you really want to get into stocks that are like 0.0001, because if you spend even $50 and they go to $1 tomorrow, you'll have something like 10,000 coins or 15,000 coins or 18,000 coins, and they go to $1, you'll have $18,000. So you spend $10 or $20 or $50 buying a coin that was so small in value, and if you lose it, you won't care much. But if it goes up, you'll make tremendous amounts of money. Litecoin, XRP, which is Ripple, Bitcoin, I said Bitcoin Cash. Bitcoin Cash could potentially replace Bitcoin, and XRP could potentially completely blow away all in market cap. By the way, another thing important to know is it is extremely critical to know how much coins are out there and what the market cap means. So if you have maybe, XRP has 100 billion XRPs, out of which 30 billion are in the market or what have you. So if you expect a price to go to $5, what does that mean for the total market cap? And why would it go to $5? And you have to do that multiplication with the total, available coins and see what it would mean for that market. Is it a realistic number or not? Ethereum, very important to IOTA, Cardano, Neo, Monero. Dash is a good one, by the way. Monero is a really cool coin. Monero is truly, truly anonymous. You don't know who owns it. No one can track it. So you'll see a lot of wealth being parked into Monero. Dentcoin, DENT, Digibyte, and this is a really cool one, and it's got a very low price these days. It's called Electroneum, ELECTRONEUM. It's one of the first British coins from the ICOs. It is exempted from the British stamp and tax duty. It'll be used within the system over there, and the stockbrokers are, once the stockbroker market start getting into it, because stamp duty and everything else erodes the profits and so forth, they'll start trading coins like this. So Electroneum is one that I'd invest a little bit, and I see it going through the roof. Um, Listen, guys, it's been awesome, but I am a little under the weather, and I have to go. Is there any other question that I? Okay, so Sanya, you asked one question: what are the fundamentals driving the rise in crypto value? Um, Not speculation. Listen, I'm going to be very blunt and honest about this thing. Special speculation. It is speculation, and so the value remains extremely volatile. So what's driving it? What's driving it is the people like you, me, and your neighbors, and the neighbor's auntie who used to do committee meetings and so forth has now decided to jump into Bitcoin. That is what's driving it. Choose your wallets carefully. Choose your exchanges carefully. Please name of best digital wallets. I use blockchain info and blockchain.info. You can go and create a wallet over there. But the one that I really like, obviously, are offline wallets. But Hassan, since you asked this question, there's something called My Ether Wallet. I think I'm saying it right. My etherwallet.com. Never ever make it your muscle memory never to click on a link and go to a website. Always type it, because this is what people are doing. They're disguising the name, and the underlying link is going to be different, and they'll steal your passwords and everything else. So my ether wallet, and you want to do the private key or the private phrase wallet. They're slightly difficult to open, but remember, there are people who've spent a lot of time explaining each and everything about how to open a digital wallet in it, and how to keep it there, and how to how to open it. How everything has been explained. So that's in it for me. And I am, last question. No matter what coin we buy, as you suggested, the only way to cash out is using BTC, right? So the value at that point in time, the value of the BTC will not matter, Amar, because you're going to do an instant buy and a sell. Because when you sell your XRP towards BTC, that's one. So you're buying BTC, and then when you sell BTC immediately to cash out onto the fiat USD, you're selling it out. Another thing you want to look at is tethered, USDD, USDT, T as in Tommy, tethered dollars, and so forth. But anyways, I hope this was informative, and hopefully we'll have a slightly more detailed one next one around. From Istanbul, signing off. Have a good one, guys.